Welcome to the ETF.com video series. My name is Dave Nottig, Managing Director at ETF.com. I'm here at Inside ETFs with the CEO of Sanford Bernstein, Robert Van Brugge. Thank you for joining us.
Thank you for having me.
So you guys have been in the ETF space for a while, but I think most people probably know you from your core equity research. Tell me a little bit about how you chose to take that core equity research and turn it into indexes and ETFs.
Absolutely. So for a long time, clients were questioning whether sell-side research was actually generating alpha. They really appreciated the insights and the ability to take those insights into their own investment process, but they were always a little skeptical about the stock picks that sell-side research firms like us put out there. So we went back and, as a true research firm, decided to test the hypothesis. And what we found was that indeed, over many years, many decades actually, we generated consistent alpha through our investment recommendations. So we wanted to put that out there for our clients to see, and then we said, well, you know what? Once we have this out there, why don't we actually turn it into an index that's easy to track? And then the next step was to create an ETF out of this.
So I was surprised looking at your funds. They're very high active share, but they're passively managed. They're index products. What's the logic behind that?
So the beauty of being a sell-side firm is that we actually publish our recommendations. So a typical buy-side firm has an internal process, but as an external observer, you would never know that. Because we actually publish all of our ratings, it is very easy for us to put it into an index, and that way everybody can see it. It is very transparent, everybody can track it, and if you have a passive exemption, it is very easy to turn it into an ETF.
Sure. Looking at the actual portfolio in, say, BERN, which is the US-based product, it actually looks fairly contrarian. I was looking at it today. It's a little overweight on financials and energy, a little underweight on technology, on healthcare. Does that say something about the core methodology?
Yes, the core methodology has two components. It is that Bernstein fundamental research that we're so well known for, but also what some clients may not realize is that we have a long tradition in quantitative research. And the Bernstein index is really a combination of that fundamental stock picking overlaid with our quantitative methods. And it was really the quantitative signals that started flashing more opportunities in financials and energy, and as a result you saw more of an overweight, and obviously with the tech sell-off that was, so the momentum slowed there, and some of those factors would lower our exposure there.
And what's it telling you about 2019? What are you looking at for the future?
Yeah. Well, as we know, I mean, it's been quite a seesaw here. So after the big sell-off in the fourth quarter, what we've seen is a phenomenal rebound. So those momentum factors are definitely flashing the other way again. So being more bullish again right now. But if you look at our fundamental research, we continue to see opportunities in a number of the technology names as well. So for example, software names still look highly attractive to us. Energy looks highly attractive to us from a fundamental point of view. So that is what we're pointing our clients and investors to for the future.
Great. Well, thanks so much for joining us, and thank you for joining us for the ETF.com video series. Stay tuned for more from Inside ETFs.